Investor, entrepreneur, and former CTO of Coinbase, Balaji Srinivasan, recently tweeted a response betting that Bitcoin would hit $1 million in 90 days. Well-known investor, founder, and CIO of Ark Invest, Cathie Wood, also has a $1 million price target for Bitcoin, although her time horizon and catalysts are much different. With that in mind, Cathie invited Balaji to talk with her on a recent For Your Innovation episode. Although Balaji admits that his $1 million in 90 days prediction is a bit tongue-in-cheek, he does believe that Bitcoin could hit that $1 million target sooner than many analysts would admit, mostly due to the failed monetary policies of the Fed and the increasingly likely scenario that the dollar will lose its global reserve status. In other words, hyperinflation. Cathie believes that Bitcoin will ultimately hit her $1 million price target due to deflation and counterparty risk, although her time frame is sometime within the next decade. While they disagree on a few points, it's interesting to hear Cathie and Balaji agree on the value of Bitcoin as a modern flight to safety. The following are a few short clips that I wanted to share from Cathie's point of view. Be sure to stay tuned for Balaji's point of view.
I understand why Bitcoin went from 19,000 on March 13th, the week after the weekend of Signature and Silicon Valley Bank basically going into receivership. It was a flight to safety, 19,000 to nearly 28,000. That was that proof of concept right there. Decentralized, transparent, auditable, and so forth. I worry that that this economic downturn, this deflation, is a much bigger problem right now. We just saw that the Fed raised interest rates for the first time ever in the middle of a crisis, and they've been talking once again about the need to increase interest rates at the next meeting. So I don't think they respect market signals. And this is a big problem. They are not looking at market signals. They're looking at massively lagging and unreliable indicators that are based on, in a world, the statistics came from the industrial age. So they're not even looking at the right numbers. Pricing signals are the most important signals right now. Credit default swaps, interest rates, yield curves, right? Bitcoin, yes, I agree with that. But I think you might have your hyperinflation of Bitcoin. And I think what we're coming to, it's not going to be inflation. It is not going to be inflation that we're worrying about this year. It will be something else. It may be counterparty risk, but I don't think it's going to be inflation in the prices of goods and services. During my discussion with Art Laffer last week, we were talking about Bitcoin, and he said, we really need to add, in terms of trying to figure out what's really going on out there in terms of the money multiplier, add Bitcoin to the monetary base, and we'll get a better picture. So he's already thinking in this way. And I was so happy that he said it. Half of the solution is understanding a problem and understanding how we should try and frame things to understand what's really going on out there. But, I am going to continue paying attention to market signals. I see credit default swaps settling down a bit. We haven't seen the regional bank index break down again, but it hasn't V-shaped either. So I think that's a risk there, that there's another episode. So we're watching all of this very carefully and watching the stock market. Now, the stock market is very sensitive to all of this. And it is very interesting for me to watch the stock market levitate through all of this. And I think one of the reasons it is it smells the end of rising rates. It sees over whatever the Fed's going to do right now to much, much lower interest rates because of this deflationary pull from monetary policy and gone wrong, velocity falling, and that's the bad deflation side of it. But then you've got the good deflation side of it, and the very positive form of deflation we're going to see, if we're right, is going to cause enormous growth in everything blockchain related, in all that innovation, as well as, the other platforms, the multi-omic sequencing, robotics, energy storage, and artificial intelligence. And they're all going to start converging. And, it's messy. It's messy getting from here to there. But I think, again, just the recognition of what can go wrong with the banking system, I think is going to cause more people to seek more insurance policies.